Welcome back, everybody, for another deep dive. This time, we're going to be looking at Sandstorm Gold's third quarter performance for 2024. You sent over quite the collection of sources here. We have earnings reports, investor presentations, and even an analyst's take on YouTube. So I think we got plenty to dig into.
Yeah.
So maybe before we get into the nitty-gritty of the numbers, can you give us a quick overview of Sandstorm Gold, what they do, and why an investor might consider putting their money into them?
Sure. Sandstorm Gold is what's known as a gold royalty company.
Okay.
And that basically means that instead of mining the gold themselves, they provide financing to mining companies in exchange for a percentage of future production or revenue.
So it's kind of like they're a silent partner.
Exactly. Think of it like providing the seed money for a gold mine, and then you get a cut of the profits as it operates. And this structure is attractive to a lot of investors because it offers exposure to gold, but without the direct operational risks and capital expenditures of running a mine. So they benefit from higher gold prices, but they're not directly impacted by rising mining costs or labor issues or any of the other headaches that come with actually running a mine.
So speaking of gold prices, how did Sandstorm actually perform in Q3? The sources seem to paint a bit of a mixed picture.
Yeah, so on the one hand, Sandstorm reported record margins and really strong financial health.
Okay.
Their revenue was up year over year, they're generating positive cash flow, and they're committed to returning capital to shareholders through dividends and share buybacks. But on the other hand, their gold equivalent ounces, which is basically a measure of their overall production, were a bit lower than expected.
And the YouTube analyst that you sent over seemed especially concerned about Sandstorm's debt levels.
Yeah.
Is that something that our listeners should be worried about as well?
Debt is definitely something to watch with Sandstorm. They currently have around $369 million outstanding. And with interest rates where they are, those payments are definitely eating into their cash flow.
I see.
But, Sandstorm is actively working to reduce that debt. They're targeting $350 million by the end of the year through a combination of cash flow and asset sales.
Now, that analyst we were talking about, he was arguing that selling assets isn't necessarily ideal for a royalty company because it cuts into their potential future income.
Mm-hmm.
Is that a valid concern?
Yeah, that's a valid point. It is a trade-off. They're giving up some future income potential in exchange for reducing their debt burden right now.
Right.
The company has said that they're being very strategic about it. They're focusing on selling non-core assets, things like debt and equity holdings that they have in other companies, rather than their core royalty assets, which are really central to their long-term growth. So really, they're betting that reducing that debt burden will ultimately make them more profitable and allow them to return even more capital to shareholders in the future.
Okay, so it's kind of like a balancing act there, right? Yeah. Let's switch gears a bit and talk about one of their key assets. This is the Greenstone mine in Ontario.
Yeah, Greenstone's really interesting. It just started production in May of this year, so it's very new.
Okay.
And it's expected to be a significant contributor to Sandstorm's overall production in the years to come.
Got it.
So they have a stream on this mine, which basically entitles them to a percentage of all the gold that it produces. Initially, it's 2.375%, and then after a certain amount of gold has been delivered, that drops down to 1.583%.
Interesting.
But the challenge right now with Greenstone is that it's ramping up slower than expected, and that's likely contributing to those lower than anticipated gold equivalent ounces that we were just talking about.
So it was a bit of a waiting game, I guess, with Greenstone.
Yeah, it's a bit of a wait and see.
Are there any other projects or assets in their portfolio that you think our listeners should have on their radar?
I think it's worth touching on Hod Maden. This is in Turkey, and it's actually Sandstorm's largest asset in terms of net asset value. That means that it makes up a sizable chunk of their overall worth.
Okay.
And the analyst mentioned a recent landslide at another mine in Turkey. This was SSR Mining's Koppler mine.
Yeah.
And he suggested that this could be a cause for concern, for Hod Maden as well.
Yeah, he made it seem like it could be a pretty big deal.
Yeah, and I think it is something to keep an eye on for sure, but I wouldn't hit the panic button just yet.
Okay.
Remember that with the royalty model, Sandstorm isn't actually responsible for the day-to-day operations of the mine.
Right.
So if SSR Mining runs into challenges operating that mine, there's a good chance the project would be sold to another operator who can manage it effectively.
I see.
So Sandstorm still benefits.
Yeah.
That inherent flexibility of the royalty model provides a little bit of a safety net.
Makes sense.
The underlying asset, the gold that's in the ground, still has value regardless of who's operating the mine. And royalty companies like Sandstorm are very often in a really good position to benefit as projects mature and are taken over by more established operators.
So, okay, we've covered the company overview, some highlights from their Q3 performance, and touched on a couple of their key assets. But before we move on to their growth outlook and the big question of whether Sandstorm is actually a good investment or not, is there anything else our listeners should know about the royalty model in general?
Yeah, I think it's important to emphasize that royalty companies, companies like Sandstorm, offer a very unique way to invest in gold.
Right, and you mentioned the benefits of avoiding the operational risks of mining, but are there any other, advantages that we should highlight for our listeners?
Yeah, one key advantage is that royalty companies can very often generate strong returns, even if the price of gold remains relatively flat. This is because they're receiving a fixed percentage of the production or the revenue from a mine.
Right.
So as the mine produces more and more gold over time, their income also grows. They also tend to have much lower operating costs compared to a traditional mining company,
Right.
which means that they can still be very profitable even in a lower gold price environment.
So basically, if an investor is bullish on gold, a royalty company could be a way to leverage that bet without taking on the full risk of a mining operation.
Exactly.
Interesting.
And another advantage is that because royalty companies are often investing in multiple different projects in different geographies and at different stages of development,
Right.
they can offer investors a level of diversification that's really difficult to achieve with just a single mining company.
That's a good point.
So for an investor who is interested in gold, royalty companies like Sandstorm are a really great option to consider.
So with that understanding of the royalty model and kind of a snapshot of Sandstorm's current position, let's move on to the big question. What does the future actually hold for this company?
Okay, let's do it. Let's dive into their growth outlook next and discuss whether or not their current valuation actually reflects their potential.
Sounds good.
I think it's going to be pretty interesting.
I'm all ears. Let's unpack that in part 2 of this deep dive.
All right, so we're trying to figure out if Sandstorm Gold is a company worth investing in. Let's play pretend for a minute. Let's imagine that everything goes perfectly according to plan. What would that look like for an investor?
Okay, so paint me a picture of the best case scenario for Sandstorm.
All right, so let's fast forward to 2030. Imagine Sandstorm has successfully paid down all of its debt. Their interest payments are manageable. They're generating tons of cash flow. Greenstone is humming along at full capacity, and Hodmaden has overcome any initial hurdles, and it's just churning out gold. Plus a bunch of other projects in their portfolio. Remember, they have over 200 royalties, so a bunch of those have also started producing.
Okay, and to spice things up even more, let's say gold prices have just continued to rise, maybe because of inflation, maybe global uncertainty, who knows. What would that do for Sandstorm?
Well, in that scenario, they would be in a very enviable position. They would be generating significantly more cash flow than they are today. And remember, they've committed to returning a big portion of that cash flow to shareholders through dividends and buybacks. So you could potentially see your investment grow in two different ways. You would have stock price appreciation, and you would also get those direct cash returns.
It sounds pretty promising, but we got to be realistic, right? What are some of the things that could go wrong? What are the roadblocks that could sort of derail their plans?
Yeah, you're absolutely right. We always have to look at both sides of the coin. So, for example, even if they hit all their debt reduction targets, they're still going to have those interest payments until that debt is completely gone.
Right.
We also can't forget that they rely on other companies to operate the mines. So if there are any delays, any cost overruns, or even God forbid, a major accident at one of those mines, that could really impact Sandstorm's production and their profitability.
And what about geopolitical risks? I know some of their assets are in regions that, have had some issues in the past, some political instability, or maybe changes in mining regulations and things like that. Could that affect their operations at all?
Yeah, absolutely. I mean, take Hodmaden in Turkey, for example. While I don't think the recent landslide at that copper mine necessarily means doom and gloom for this project, it does highlight that these things can happen, right?
Yeah.
These unforeseen events can occur and potentially disrupt operations. So these are factors you have to weigh as an investor for sure.
Right. And then, of course, we can't ignore the volatility of gold prices themselves, right?
Right.
What happens if the price of gold just tanks?
Well, that's the inherent risk that you take with any commodity-based investment, right? If the price of gold falls, Sandstorm's revenue and profitability are going to take a hit. So it's really crucial to have a view on the future of gold before investing in a company like this.
So it sounds like what we're saying is that Sandstorm is kind of a classic, high-risk, high-reward type of investment. There's definitely potential for some significant upside, but there's also some pretty big hurdles that they have to overcome.
Yeah, I think that's a really fair assessment. And ultimately, whether or not Sandstorm is a good investment for you, individually, it really comes down to your own personal risk tolerance, your investment goals, and maybe most importantly, your own outlook on gold.
That makes a lot of sense. So for our listener who's at home right now, maybe thinking about investing in Sandstorm, what are some of the key things that they should be thinking about? What questions should they be asking themselves?
I would say there's three main questions to consider.
Okay, let's break those down one by one. What's the first one?
First, can Sandstorm execute on their strategy? Can they effectively manage their debt, navigate those operational and geopolitical risks that we talked about, and bring those key projects online as planned? Their track record suggests that they're capable, but there are always challenges in this industry. So that's the first big question.
Makes sense, all right. Question number two.
Second question is, what's your own personal view on the future of gold?
Okay.
Do you believe that gold prices are going to remain strong or maybe even go higher? If you do, then a royalty company like Sandstorm could be a way to leverage that bet without taking on the full risk of a mining operation. But if you're bearish on gold, you think it's going to go down, then it's probably best to just steer clear.
Makes sense. Their fate is kind of tied to the price of gold no matter what, right?
Pretty much.
Okay, and the third question.
This is maybe the most important one. Does Sandstorm actually fit your own individual investment style and risk tolerance? Are you comfortable with the kind of volatility that comes with commodity investments? Are you willing to be patient as these projects develop and mature? If the answer is yes to those questions, then Sandstorm might be worth taking a closer look at.
This has been incredibly helpful in understanding Sandstorm's position and kind of the broader dynamics of the royalty model. But before we wrap things up, I do want to touch on one more thing that the analyst brought up. He was talking about valuation, and he argued that even if you use a really conservative gold price assumption, that Sandstorm stock could still be significantly undervalued. Can you explain what he means by that?
Sure. He's essentially saying that the market isn't fully pricing in Sandstorm's potential. Remember, they have this massive portfolio of royalties, and many of them aren't even producing yet.
Right.
So if those projects come online and they start generating the cash flow that Sandstorm is projecting, their overall value should go way up. And he's saying that if the market values Sandstorm at a multiple of their future cash flow, which is a pretty common way to value royalty companies,
Okay.
then their stock price could be much, much higher than where it is today.
So for our listener then, who is thinking about this, how should they interpret this information? What should they do with it?
Well, I think it's important to remember that this is just one analyst's opinion, right? And valuations are always subject to change based on market conditions and investor sentiment. But if this analyst's assessment is accurate, it does suggest that there's potential for some pretty significant upside in Sandstorm's stock price over the next, 5 to 10 years.
So definitely something for our listener to ponder as they weigh their options here.
Absolutely.
All right, so we have covered a lot of ground in this deep dive. We talked about Sandstorm's financials, their debt situation, the Greenstone mine, the Hod Maiden project, and even, delved into some of the broader trends shaping the gold market. Is there one big takeaway that you would leave our listener with as they continue their research into this company?
I think the biggest thing is just understand that Sandstorm is very much a company at a crossroads. They're making strategic moves to try to position themselves for potentially really explosive growth.
Right.
But at the same time, they're facing some very real challenges. Their success is going to come down to their ability to execute on their plan, navigate those risks that we talked about, the inherent risks of this industry, and ultimately capitalize on the potential of all of these assets that they have.
It's a very compelling story, and I'm sure our listeners are going to be eager to see how it unfolds.
Me too.
It sounds like Sandstorm Gold is really making a bet on, two things, right? The future of gold and also their own ability to execute on, these pretty ambitious plans that they've laid out.
Yeah, for sure. I mean, their whole business model hinges on this idea that gold will at least hold its value, if not go up, over the long term.
So for our listeners out there, thinking about maybe making an investment in Sandstorm, it sounds like they really need to, think about their own personal outlook on gold. That seems like a pretty crucial piece of the puzzle here.
Yeah, definitely. If you think gold is heading for a bull run, maybe now's the time to buy. A company like Sandstorm could be a really, really good option because they've got that diversified portfolio and they're very much leveraged to, changes in the price of gold. But if you're on the other side, if you're a little bit skeptical about gold's future, then it's probably best to steer clear of this one.
Makes sense. At the end of the day, you really got to align your investments with your own market outlook and your risk tolerance, right?
Absolutely. And, within the gold space, there's all sorts of ways to get exposure. You could buy physical gold, you could invest in, gold ETFs, or you could even buy shares in traditional gold mining companies.
So it's really up to the individual investor to do their research, explore the different options, and figure out which one is the best fit for them.
Exactly. Do your homework. Don't just jump on the bandwagon because someone on YouTube is saying this is the next hot stock. Take some time, research different companies, really dig into their financials, and think about how it all fits into your own, personal investment strategy.
I think that's great advice for any investment, honestly, not just gold.
Yeah, definitely.
So we've covered a ton of ground here in this deep dive. We talked about Sandstorm's financials, their debt situation, the Greenstone mine, the Hod Maiden project, and I think we even gave a pretty good overview of, the broader trends that are shaping the gold market. Is there anything else, any final thoughts you want to leave our listeners with as they maybe continue to research Sandstorm and other royalty companies?
I think the key takeaway is just that Sandstorm is a really fascinating case study. And it's all about risk and reward, right? They have this potential to generate, really significant returns for investors, but their success is definitely not guaranteed. So this is a company that requires some really careful consideration. You have to really understand the company itself, but you also have to think about the broader, market forces that are at play here.
Yeah, it's a really compelling story. And I'm personally very interested to see how this plays out.
Me too, for sure.
Well, this has been a fantastic deep dive. Thanks for walking us through all this. I think our listeners got a lot to think about and a really solid foundation to build on as they explore this space further.
My pleasure. Always happy to talk about gold and royalty companies. It's a fascinating area.
For sure. And to all our listeners out there, thanks for tuning in to another deep dive.